Good afternoon, welcome to Market Wrap 113. Some information, some education, some common sense. That's what we're doing, and that's why we do it. Just share it if you can, if you have the opportunity, and like it. Now this week it's a roller coaster. We've got interest rate rises, we've got SPVs saving us tax, we've got house prices falling, we've got the rate of space finishing, we've got rents going up, and we've got Ozzy Osborne shouting, That's, in a nutshell, what Market Wrap this week is all about. Stuart Williamson here at the helm. Bank of England raises interest rates for the sixth time in a row from 1.25% to 1.75%. The Bank of England's decision to increase rates by half a percentage point makes it the largest increase for 27 years. Well, we knew it was going to happen, and it's on the way. The move is an attempt to slow the rate at which prices are rising. The bank has warned that inflation could pass 13% later this year. So if you're borrowing money, that means you're getting paid 7%, 6%, 8% to do it. The last interest rate rise was as high as this was during the global financial crisis in December 2008. The rise in interest rates pushes more landlords into the Section 24 trap, and higher interest means higher tax to pay. So if you are a landlord and your interest payments are going up, we recently discussed this on how to deal with it via Get Ground in the Market Wrap. But please do see the link at the end of the wrap, which tells you a bit more about SPVs and how they work. Okay, on the 5th of August, Halifax reported the first time house prices had fallen for over a year. Average property prices 293,221. Annual growth strongest in Wales at 14.7%. Average UK house prices fell in July by the first drop for over a year, according to the latest Halifax market data. The lender's latest house price index showed that price growth declined 0.1% or £365 month on month since June, valuing an average home at 293,221. Halifax also reported an easing in the annual rate of house price growth to 11.8%, down from 12.5% last month. However, the market is still resilient, still strong, says Zoopla. Despite increasing economic headwinds characterised by soaring inflation and rising interest rates, combined with a cost of living squeeze, Zoopla said that house prices had remained resilient. The company acknowledged that demand for homes has slowed during the course of 2022, but remains 25% above average over the last 5 years, and on a par with the figure recorded in 2021. So there's still a lot of interest. Richard Donald, Executive Director of Research at Zoopla, said the ongoing impact of COVID-19 pandemic provided the opportunity for flexible working and continued to support a desire to move amongst house buyers. This is a big reason why the market is not slowing as fast as some might expect. Demand remains for sensibly priced homes, especially in more sensible areas. Mr. Donald commented. So, now the race for space, is it over? That has been reported in quite a few areas. I think Savills have covered that. The lure of city living means the prices of properties in urban housing markets are now increasing faster than homes in surrounding rural areas. House price growth in the UK's country and coastal markets is starting to steady after 2 years of runaway growth, Savills recently quoted, in fact this week. They go on to quote, following 2 years of unprecedented growth in the UK's regional markets, the market has started to readjust and price growth is softening, said Francis MacDonald, a research analyst at Savills. Which is interesting because the coastal areas really have gone up. Fast broadband, why not live in a nice location? Same in the country. The suburbs are the ones that have suffered really. The distribution of price growth is beginning to change. After 2 years of pandemic-fueled race for space, price growth in urban markets is surpassing growth in surrounding rural areas, they report, as the market rebalances in response to employees returning to offices. They say Birmingham, Manchester and Leeds are seeing the greatest movements currently. In addition, for the first time since December 2020, annual growth in well-connected urban markets is higher. And I'm talking about urban markets, which is slightly different from the big conurbations. They say the lure of urban living is also becoming more popular with downsizers who recognise the opportunity to sell into a market where demand hugely exceeds supply and are keen to trade in their country pads, as they call it, in exchange for properties in cities such as York, Bristol or Winchester. As a result, Savills say we can expect to see regional urban markets performing more strongly over the second half of the year. So that's an interesting concept. I hadn't thought of that, people downsizing out of the country. Right, house prices and flat prices now rising at the same speed. The same Savills report says that the phenomena of house prices rising quicker than flats has stopped. Now both are increasing at the same level. So, on to average rents. Average private rents in the UK have hit record highs, jumping by more than 20% in some areas, such as Manchester, new data shows. The average advertised rent outside London is 11.8% higher than a year ago, while in the capital it is up by 15.8%, according to Rightmove. So that's got to be good news for landlords, is it not? The rising housing costs is piling up more pressure on households already feeling the strain of the cost of living crisis and has been largely blamed on demand for rental properties outstripping supply, leading to intense competition amongst tenants for what is available. The rising interest rates are also feeding through to tenants, with many landlords actually on tracker rates, so they're having to increase their rents. During the period from the 1st of April to 30th of June, the average advertised asking rent outside of London hit another record of £1,126 a calendar month. This is an increase of 19% or £177 in 2 years since the pandemic started. So it really is a pretty grim situation. In London, there was also a new record average of advertised rent, an average of £2,257. And the Rightmove website said the 15% annual rate of growth was the highest ever annual rate of any region since records began. However, some regions have seen even bigger increases. Rightmove's table of rental price hotspots was topped by Manchester, where the average asking rent is up by 23.4% in a year, from 913 in the second quarter 2021 to 1127 in the same period last year. I mean, there are some pretty swanky apartments going up there in Manchester, and so that could have pushed it up, I think. The return to the office, more overseas students looking for a place to live, and companies moving or expanding have all fired up the market. Rightmove has said the stock of available rental properties was down 26% compared to last year's levels, whilst demand was actually up 6%. In addition, the average monthly rental payments were now 40% higher than they were 10 years ago, while typical mortgage payments for the same period are only up by 13%. These are, crazy stats. This next one I think is extraordinary. An estimated 11 million people rent privately in England alone, and the sector has doubled in size in the last 20 years. Quite phenomenal. Right, how has Birmingham benefited from the Commonwealth Games? Well, University of Birmingham early assessment of the economic impact of Birmingham Commonwealth Games says that, and this is a direct quote, the Games will have generated reputational effects that challenge negative perceptions of Birmingham. There might be young aspiring athletes inspired by seeing the Games in person. In addition, the new infrastructure built for the events might have considerable impacts on local communities over time. Additionally, there are impacts on the civic pride derived from all the activities across the city, not least watching Ozzy Osborne shouting "Birmingham forever." So the Commonwealth Games apparently created 7,000 jobs, many of which will carry on. So the Commonwealth Games, the Levelling Up Agenda, Mercia Studios, Good Value Property and the HS2 are all good reasons to look at Birmingham and across the Midlands in general. I'd like you just to have a look, if you could, at our latest development that's benefiting from HS2. The link is below. HS2 is going ahead as far as Manchester Birmingham. It will have a terrific impact in reducing emissions, in freeing up traffic and making travel a lot easier and making growth locations happen away from city centres. That's it for this week. I do hope you've enjoyed. Do take care. Like and subscribe if you can. And no, as one of our commenters said last week, I am not drunk, but yes, I do read from a screen of notes I prepared before. Thank you. Bye-bye.